Well, good morning, everyone. Thomas Montgomery. It is a beautiful Wednesday morning, September 21st, 2022. We get together with our distribution partners most weekday mornings at this time to talk strategies, tips, techniques, share success stories. Obviously, today is a big day. We're awaiting for the Fed's decision on the new interest rate hike. And so what we know is that the cost of borrowing money is continuing to get more expensive. Frequently, you and I are going to run into clients that just need some cash flow assistance. They may be coming to you and I to be able to access the 100,000 or more of debt, but sometimes small businesses are just needing some extra working capital. So today we're going to talk about the Opportunity Fund, make sure that each of you know what it is and how it works, and how it might in fact be a resource to some of your clients or prospective clients that are just lacking the liquidity to be able to get up and going while working on their capital raise. Let me make this a bit larger. All right, so what is the Opportunity Fund? It is an the Opportunity Fund is an economic empowerment program to assist small businesses who need an immediate stream of earned income. And it's set up to put about $100,000 a month into their business bank account. So does it get rich quick? Absolutely not. Is it free money? Is it a gift? Absolutely not. It's earned income. As I mentioned in our opening, this is especially valuable for entrepreneurs who don't yet have the borrowing capacity due to either credit or cash flow reasons. And we frequently see this, don't we? You and I are out helping small businesses, we're educating, and it's not unusual to see someone that wants to borrow money, but they're not ready to borrow money. They're not credible enough on paper yet. Well, what have we talked about? The 3 C's: credit, collateral, and capacity. This addresses the third of the 3 C's, capacity. In summary, it's designed to be a hand up versus a handout approach for entrepreneurs needing assistance and getting prepared for their capital raise by injecting earned cash flow, not debt. So the Opportunity Fund is a resource for participants to generate income, but not incur debt. If you have any questions, comments, concerns, just let me know. Post it in the Q&A of Zoom. It's kind of like a chat function. All right, let's scroll on down. So this is built as a financial literacy initiative, largely assembled off of the SCORE model. I know I used to be a SCORE mentor. I think many of you also were SCORE mentors in the past. And so this is a variation of that model that's been around for over 50 years. So the Opportunity Fund was created by a group of us that were with SCORE and or with SBDC and had some input from some business lenders. What's happening is the participants in the Opportunity Fund are allocating a little bit of time, not a significant amount, to help build financial literacy and create awareness of our guaranteed financing program. And for those that are not familiar with it, there's 2 YouTube trainings here. Obviously, there's no cost to participate in the Opportunity Fund. You might ask, well, what type of income could the participants recognize from the Opportunity Fund? Well, our goal is to put $100,000 per month of additional bank deposits into their business bank account. Well, why is that important? So if you and I could help a client put an extra $100,000 in their bank account in 1 month, why is that good for them? Well, one reason is it improves their bank rating. I think each of you, we've trained on it before. You know how banks rate business bank accounts. It's not unusual that you and I are going to see small businesses that have a very poor bank rating that doesn't reflect well upon them. You and I can help them improve their bank rating through the Opportunity Fund. So that's benefit number 1. Benefit number 2 is we can help them have stronger financial statements, including a balance sheet. So now they have more assets without liabilities and a stronger income statement. Third is then they'll have some available working capital while we're working on their capital raise. So they have some money to spend on those things that they need. And again, it is not debt. They do not have to pay it back. It's about the closest thing to grant money other than grant money, because it's an injection of capital that does not have to be paid back. So those are four very, very powerful benefits of the Opportunity Fund. So most specifically, participants in the Opportunity Fund should generate around $100,000 a month. Our goal is to help them help 8 clients a month. And we do that, as you know, through the White Label Partner Program. So they're able to recognize around $2,500 upfront for each participant, and then depending upon how they want to charge their clients the participation fee, around $10,000 afterwards. So let's open up the lines here and address questions or concerns that any of you have about the Opportunity Fund. So Al, Alfred, Andre, Bernard, Bruce, Charles, Collis, Dawood, Jeanette, Jeremy, Jose, Kat, Kaylin, Lon, Pauline, Chanel, and we have 215 of you on here. So who has questions? All right, so Kaylin has the first question. Will this affect their taxes? Well, yes, because this is going to generate new income. Now, what's interesting, Kaylin, is that the $2,500 that's paid to the Opportunity Fund participant, this is not taxable income, but the back end income is. So it's kind of a split answer. So Kaylin, you and I could help Joey. And let's say that Joey enrolls in the Opportunity Fund, and we're on track to help 8 clients. 8 times 2,500 is 20,000. What would be the tax liability for Joey? 0 on that, because it's a deposit. Deposits are not taxed by the IRS, but the back end income would be taxed. But that's true with most income streams of the business. You have revenue come in, you deduct your allowable expenses, whatever's left over is the profit. And then, of course, profit is taxed. How it's taxed depends upon how they have their business set up. All right. Thank you, Kaylin, for that. Who else has questions on why this is needed, why this is valuable when you're running into small businesses that are just running on fumes? Again, we've got the 3 C's. Credit. Can we help clients improve their personal or business credit? Of course. Collateral is the second C. Can we help small businesses improve their collateral? Absolutely. That's why we have the Collateral Support Program. Thirdly is capacity. How do you and I help small businesses that do not have demonstrated capacity to borrow money? And we see this. We have a client I was working with this morning. A great guy, had a business, really went down with COVID, has not generated income for a couple of years. He has kind of gone off the grid. He went into a pastoral role that generated no verifiable income. And here he is looking to borrow a lot of money to kind of rejuvenate that insolvent business. Well, he's a great example of someone that has no capacity. That C of the 3 C's, he just simply doesn't have. Now, I know, and this is what Lon's bringing up, different sources of capital have different underwriting criteria. Not all of them look at capacity. That is a true statement. But we have another client, Tiffany. She's looking at opening a nail salon. She's had no business income. She's pre-revenue. She's had no personal income, no tax returns. She has no capacity. She is an excellent fit, and I think she'll plug into this today. She's an excellent fit for the Opportunity Fund. So there's a lot of people that are coming up short on capacity. And so the secret sauce of what you and I do is we help people become credible enough to get funding. And for just about any type of funding, if we can add an extra $100,000 a month in new bank deposits, that makes them much more fundable. But I'm okay with the hard questions. So again, what questions do any of you have about, well, why do people need capacity? Or why is the Opportunity Fund valuable? What questions, comments, concerns do any of you have? And Timothy's asking, and that's exactly right. It is earned income, right? It's not debt. They don't have to pay it back. It's not a gift. It's earned income. All right, so I see several hands up. Just go ahead and type those into the Q&A. Susan's asking about the email I sent out this morning, which is unrelated to this, so I don't want to confuse people. But yes, I did resend out, Susan, to all of you that are RVPs and white label partners this morning, the recording of the August 10th training, as well as the agenda. Many of you are setting up workshops where we're coming out and doing in-person workshops together, but some of you aren't. And so I just went ahead and proactively sent that out to all of you in case you're interested in setting up an in-person workshop in the month of October. Again, that really has nothing to do with what we're talking about now, but since the question came up, I wanted to answer it. So that describes the specific process and remuneration. Okay, so again, what is it that you and I do? We do three things. We help small businesses build their financial literacy. We help them build a lender compliant loan package, and we help them become credible enough to get funding. Credibility typically falls into those three C's that you and I probably wake up about, dream about, think about all the time: credit, collateral, capacity. So when we're building out the loan package of a client, we're able to assess what are their credibility factors, what are any voids, gaps, or issues. Some people have credit issues. Let's say their business credit's not strong enough. So what do? We help them add trade lines to build their business credit. Sometimes their personal credit is a barrier, so we can help them with that. From a collateral perspective, we look at their personal financial statement. We look at their balance sheet and say, okay, do you have the collateral needed to be able to get approved? Some people don't have that. So we add $100,000 of receivables legally, ethically to their balance sheet. So now they have the collateral on paper and the value of their business has gone up, which increases their personal financial statement. Thirdly, the third C is capacity. Capacity is our ability to pay our bills, to pay our debt. Sometimes it's just simply referred to as cash flow. And you're going to have some clients, and it might surprise you, but you'll have some clients that come to you and say, hey, I want to borrow lots of money, but I don't have any demonstrated ability to pay it back. And so that's where the Opportunity Fund comes in. If you're a regional vice president, you can use the Opportunity Fund and you earn 2.5% overrides on the Opportunity Fund proceeds that your team raises. So it's not MLM, not network marketing. There's no cost to be an RVP. There's no cost to be a white label partner and use the Opportunity Fund. But it addresses one of the three C's. All right, who else has questions? All right, so we've got a question here. So we've got a client has already received PPP and EIDL funds, and that's pretty common for businesses that have been around. The government was quite generous with giving that free money out. So the client's looking for additional funding. Great, great. Yeah, and so what I would do is get the client enrolled in the guaranteed financing program. There's training that you'll see that we included on this. And so that's the core of what we do is helping clients get funding, and the guaranteed financing program is the most common resource to do that. Who else has questions, comments, concerns on the Opportunity Fund? Well, let me be more direct. Do you see any small business? Well, let me reword it. Have you interacted with any small businesses that just simply needed some operating funds? Alfred, have you seen that? Have through your work with us, as you're talking to small businesses, do you run into any that just, frankly, they're not cash flowing? And so at the core, regardless of borrowing money and taking on debt, are you running into small businesses that just could benefit by having an extra $100,000 a month of bank deposits? Alfred, let me know. Andrea, let me ask you, I know you've been busy out there talking to people. Are you running into any clients, Andrea, that their cash flow is just, it's a barrier. It's not what it needs to be? Charles, how about yourself? Collis, DeWoo, Jeanette, Kat, Kaylin? I mean, I think the answer is almost an obvious yes. Now, I realize that the pushback could be, hey, I just want to get a loan. I came to you to borrow money. I don't want this opportunity fund. I just want to go borrow money. You promised me $100,000. I just want to borrow money. Great. And that is the promise that we make. And we will work with them to raise at least 100,000. No one's changing that deal. But what do we know? You have to qualify for the funding. And that's where you can get kind of sideways with people. They just want funding, right? They just want, like a toddler, they just want to bang their fist on the table. Give me my 100,000, give me my 100,000. Well, dude, you got to qualify, right? And so we need to build the loan package out at least enough to figure out the right source or sources of capital. And we have to be credible enough on paper. And that comes down to the 3 C's. Do you have to have all 3 C's? No. It varies based upon lender source, but only a fool would think that, and so you're no fool, and I don't think I am, only a fool would think that our demonstrated ability to repay debt is not going to be involved in the underwriting process. Of course it would be in most cases. And so where could that come from? Well, we could look at the business's current deposits. And of course, we would expect the business to grow with the cash injection from the loan. I understand that. But the lender is going to be a little more conservative. Okay, if I loan you 100,000, what happens if you don't see improvement right away? If the only way to pay the debt back is through the borrowed money, that is not what a business lender wants. And so, yes, we can build out the financial projections to show the growth, but they're going to often be conservative about, okay, well, what about now? What's coming in? So we could look at business bank deposits currently. Well, let's say it's a early stage or even a pre-revenue business. Well, there's nothing there. Okay, that's okay. We can get startups funded, so that's not a problem. So then we go over and look, okay, what other income streams does the owner or owners have? It's called a global outlook. So maybe they have W-2 income or other businesses that's generating cash flow that could give the lender confidence. When the business has no cash flow and the borrower has no cash flow, that puts us in a tighter position. Now, again, are there some sources of capital that we can get that do not require demonstrated capacity? Yes. But in general, we're much better off to be able to show, yes, we have some money coming in. We can afford to pay this. And so the opportunity fund is great. Even if it's a brand new business, let's say it's a muffler shop, right? And the muffler shop is not open yet. It's like, well, of course there's no money coming in. Well, if we're seeing that there's a capacity constraint overall between the owner and the business, then plug them into the opportunity fund. Let's get the cash flow coming in so their business bank account looks solvent. The last thing we want to do is go to funding and show that the client has like next to no money in their business bank account. And if you need, we can go back and revisit how bank ratings are calculated, but we've done that before. We want them to have a strong balance sheet. We want them to have a strong income statement. We want them to have available working capital. So that's, again, just keep in mind, this is the core of what you and I do. We help people that are not credible on paper to get funding become credible enough, not through magic or sorcery or anything fraudulent, but by helping improve their 3 C's: credit, collateral, capacity. That's the secret sauce. And so this is one of the 3 C's. All right. Any other, well, and a couple of you say this would work for yourself. And that's true. That's true. We had, I'll leave his name off, but we had one white label partner this morning responded and said, I need this. And I'm like, well, you got this. What do we need to do to support you? Because if you're a white label partner, this is the white label partner program, right? This is the white label partner program. This is it. This is it. You're making $2,500 up front. You set the performance fee afterwards. If you're at 10%, then you're earning $10,000 in the back end. This is the white label partner program, just labeled as the opportunity fund to be more palatable to our clients. All right. Any questions, comments, or concerns? Again, a couple of you had questions regarding setting up community workshops. I emailed that out this morning. So you have the training from August 10th or 11th. You have the agenda. Yes, we'd love to schedule and conduct in-person workshops with you. Makes you money. We help people. And it's the easiest way to generate a good number of clients every month because those folks count. Any other questions, comments, concerns before we end today's webinar? All right. Well, thanks, everyone. We'll see you back tomorrow. Bye-bye.